Good evening, everybody. Yeah, people were keep requesting pictures of the house. That's the house. That's the pool over here to the right. Got a nice breezeway or enclosed porch over here. There's my office right there. Had to take it today because our crop of dandelions is just doing great this year. And then this is driving up the driveway. That's part of the cars. Anyways. All right. As we can see, we're right back in this, in the trend channel. Unless something severe happens, the way that they're going to slowly take it back up to the top of the trend channel. And that was evident. That's every time they touched the 50. Notice the last two times they did bullish haramis. This time they did a bullish harami the next day. Didn't quite touch, but just kind of an implication that investor sentiment is coming back up again. And the real proof of the pudding is that we've got the transportation index just pushing on all-time highs here, or recent highs. But if they break through, obviously we've got a J-hook pattern coming out of this big rounding bottom in our uptrend, but don't need to really analyze that the uptrend is going to continue. You can pretty well see that the uptrend is in progress. Investor sentiment is remaining positive, and they can't even get the transportation index back below the T-line. The NASDAQ is still in this wedge formation. Stochastic's about the halfway point, slowly curling back up, so there's still a good possibility of breaking out through this downtrending channel. Oh, Barbara, let's see. That's the house. Let's see, I think I've got a better picture where here's the pool over here. There's part of my three-car garage, and I've got to build Sandy her jewelry workshop out on this end. And then over here is where the 20-car garage, the 20-car barn is going to be built. So anyways, there we are. All right, those are the cars, some of them anyways. That's coming up the driveway of the house. I've still got the 56 Cadillac, the 54 Yellow Kaiser, and the 55 Mercury sitting out behind the garage. And I've got the 55 T-Bird in the garage. Oh, Sandy asked, do you think this house is going to be too big for the both of us? No, it's not. It's not big enough. So anyway, we're looking for the NASDAQ to kind of break out of this wedge. Okay. Betsy, I wrote down your number and I've forgot about calling. Okay. Anyways, and then the S&P 500, obviously, in the same ilk here that they're bouncing up off the 50. So, again, this is not anything challenging to analyze what's happening every time it comes to a support level, and also be able to see which direction a trend is moving. Let me see if I can make this smaller. You can see there's kind of a rounding bottom, so we can get a visual analysis of what the market's telling us. For example, in the gold market. If somebody asks, what do you think the gold market's doing? Well, it's telling us it's absolutely flat. Wouldn't be trading gold one way or the other at this point. Silver, the same scenario. Just not going anywhere. So those are the type of charts you just say, I'm not going to trade those right now. Go on to other things. The dollar, as we can see, every time it gets to the top of this downward trend channel, it starts turning around. If the dollar sold off tomorrow, I'd be shorting it with the anticipation it's going to come down to the bottom of the trend channel again. Just basically, number one, we can see what the trend is, and number two, we can see what type of signals or in investor sentiment we have when we get to the top of that channel, telling us there's lots of indecision. Was that right? They had push buttons back in '53. I had drove my grandfather's 1963 Dodge Dart station wagon, or maybe it was a '61 Dodge Dart station wagon in college. It had push buttons. Let's see, what else was I going to... Oh, so right now, the only things that, the grains are kind of lethargic. Soybeans are just moving sideways. Wheat seems to have hit the bottom of a channel and maybe starting back up again. Cotton is what I've been short here for the last couple of weeks, ever since it came down through here. And so I'm just going to stay short until I see a buy signal. At this point, there's good possibility they could take it down to the 200-day moving average. I'm also short lean hogs. It hasn't broken down yet, but it's still trading below the T-line. Live cattle's doing kind of a J-hook pattern, and feeder cattle has just been stronger than bear's breath, except now they've gapped it up. So this is where you kind of watch, just take profits. If they start getting exuberant buying in the overbought condition and they start gapping it up, you start setting your stops at places that it shouldn't come back to. Let's see, sugar. Sugar, I wouldn't, well, right now on a short-term basis, I'd trade it short. There's your hanging man Harami confirmation, and now you're right here at the T-line. If they open this lower, obviously they're going to bring it back down to the 200-day moving average or that area. And I'm trying to think of what else we got. Oh, the 10-year notes. That's just great. How did I forget? Well, mental block. Can't figure out what the 10-year note is. Did the dollar, the euro. Euro gap down. It might be bottoming, but nothing that would right yet be very enthusiastic to go after. Is that the 10-year note? That's the 20-year note. But the 20-year is still in this uptrend, which means as long as they stay above the T-line, or probably the 20 in this case, interest rates are going to keep going lower. Cocoa may be starting back up, but I guess I better give this more. And more than likely, you're going to have a bounce back up to at least the 50, and then see what it does from there. Yeah, and I guess coffee, they said coffee was getting some sort of virus or some sort of fungus, but it's not affecting the price right now. It may have already come and gone. Okay, back to the analysis of the market. I want to make sure that people aren't getting discouraged. if you can see where the market's trading right now, it's trading basically at the same place it was trading 2 months ago and 4 months ago. Now, there's been movement, but the movement hasn't been anything where you could hang your hat on. I mean, even on a short-term trading basis, you could be holding a position for 5, 6, 7, 8 days, making a little bit of profit, and then bam, they take it all back from you in one day in the market. And that's pretty much what's been happening. But this is where I had to kind of figure out how to gut things out. Here's TQNT. Let me make this a little bit bigger. I mean, if we were buying right here, breaking out, and then selling right in here, we'll pretty much break even after sitting with it for 2 or 3 weeks. That's pretty discouraging. However, if we can take a look to say the next day they did a left-right combo, and today they brought it back up for a J-hook pattern, I have no qualms about buying back because this is still a very strong chart pattern. A lot of people think, oh man, I bought one and then I sold it. Boy, I can't buy it back higher. Boy, would I look stupid if it turned right around and went the other way. Well, I used to think that myself, probably way too often. Right, just the stupid part. But now I can see that if I closed out a position here, I'm not afraid to be buying here because this told me it was time to get out, and this told me it's time to get back in. So there are some that won't give you any problems. We've got a position on right now of AMKR ever since the kicker signal. No problems whatsoever. There's nothing here to create any doubt that this is in an uptrend. Occasionally some doubtful signals, but as long as it doesn't close below the T-line, you're all right with it. I was trying to make a point. So there's nothing wrong with closing out a position and buying it back. Because if it closes below the T-line, the probabilities are against you as far as being bullish. You can still have a lot of downtrend. You can always buy it back. So you missed out on a little bit of potential profit. I would rather give up less profit and be correct a heck of a lot more, or much greater percentage correct, because that compounding effect is going to be much bigger than trying to catch the absolute bottoms and tops during a trend. And when you get out of a position, it doesn't necessarily mean you have to get back in, like our BWP. Make this big so we can see it. When it told us it was time to get back out of this position, it was time to be out of this position because it hasn't really come back. So worst case scenario is you get out of a position and don't be afraid to come back in when it tells you the pattern's telling you it's time to be back in. Again, there's always that mental stigma of, oh, I bought here and had to sell out here. I can't buy back again. That would be stupid. What I usually do is tell myself, is this a chart you would be buying? And just because you owned it before, all you have to do is put your hand over the signal or the symbol, say, would I be buying this? And if you say yes, then you go ahead and buy it. Doesn't matter. JG, a war sale doesn't have any effect. That's a tax. What would I say? Tax element. And the only time that really occurs is, let's say you've got a loss in XYZ and you sell it on December 31st. But what they don't want you doing is buying it right back on January 1st because you really didn't sell it. They want you to have closed that out for 30 days so that you could take your loss, and then after 30 days, you're now establishing a new position. So the worst sale doesn't mean anything as far as your profitability. All it means is tax-wise, you're just eliminating any losses versus gains. Hold on to your individual requests. We'll get to them. Okay. Let me take a look at what I was going to there are stocks right now that if we know the market is heading up, but they've got patterns that are setting up well. Now, some patterns look better than others. This may not be a tremendous looking pattern, but the element that is involved in this one is if this moves from here up to here, you've pretty much got a 35% return. If it moves from here back up filling the gap, you've got a 100% return. So essentially this big gap down area, if they can climb this back up, the percent of probabilities or the percent of gain is going to be huge or extremely good. So not only am I looking at what the signals and patterns are, because there's always going to be good signals and patterns. Some are going to be on a pattern or a signal or a stock that if it works out well, it might go up 4%. Others might be 40%. We're looking for the ones at 40%. Jose, yes, right now it's slow. But got to remember, they came from a much higher price, 70. Now you're looking at it at 20. That if the enthusiasm comes back in, and this is not a bad chart. I mean, this is a bullish chart. It may take it a while, but even if it takes it a while and moves from here to here, that's still a 50% gain. That's going from 20 to 30. That's got some good profitability to it. That's the exact reason why I put out this morning we're also buying SCLT. Will. What do they do? Oh, did I do it backwards? Yes, I did it backwards. Sorry about that. CSLT has the same setup. We've had the reversal. Now we're back in an uptrend. But notice where it could go. It could go back up to where they opened this one just a couple months ago at the 40 range, giving you a good 120% upside potential. And so, anyways, those are good-looking charts. They've got good upside potential. On IMPV, working on some option strategies for this one so that you might not have a whole lot of money sitting in the trade, but if the trade does work, you're going to make some huge profits from it. And XON is one that we picked up last week. The reason for it is you can see the big reversal, the hammer signal. You can see the inverted hammer, and what do we know about an inverted hammer being confirmed? If they confirm an inverted hammer, the probabilities of it moving higher are extremely high, probably 95% or greater. What is the signal or pattern that led you to pick IMPV, where we've seen a number of similar stocks that gap down when they go nowhere for months, even though they have good upside potential? Just the fact that it was doing kind of a scoop-type pattern, IMPV, kind of a little mild scoop. And if we look at the signal itself, you've got a Morningstar signal, then you've got a trend kicker signal. Now you have a double doji, left-right combo, stochastic still in this lower part. This just gives you a lot of buy signals down here to tell you that they're changing direction. All right, what else do we got? We recommended PXLW. There's your best friend right there. Doji gap up, and now they're just breaking out through this level. This has got a lot of upside potential. That best friend is your best friend. ITMN. There's a hammer gap up. Looks more like a doji on the other charts. But the fact that they've gapped this up off a signal, doing a J-hook type pattern, tells you there's probably more upside. What's our upside? They're probably going to take this up a little bit more to the top of the trend channel and do a 45-degree, the same trajectory as the current trend. We'll come back to the best friends here in a minute. ANIC, this one you want to be buying. It came right back, bullish engulfing, J-hook type pattern. Let's see, now we made this too big. I would suspect the first target is going to be up here anyways, so you've got some upside potential with this one. We did TQNT. We did those. We recommended AUY the other day, and this one is still a very good chart setup. But, don't do that. Kicker signal, bullish Harami, doji gap up. If this opens positive, breaking through this level, your next target is going to be up here, more than likely coming up to fill this gap. That's going to give you a good 20% or better return. I made some money with the calls on CPE. Again, because of the kind of the steady eddy. The day it did close below here, it gapped right back up. Now they can't close this below the T line. It just tells us that this is still a good steady uptrend. And in 3 weeks from now, bought the just because the math worked out the best, buying the 10s, the June 10s for I think 55 cents. But this could be over the next 3 weeks back up into $11.50, $12, or your 55 cents turning into $1.50 to $2. Let's see. RDNT. Same scenario. Ever since it broke up above the T line, it's staying above the T line. You can still be buying this one on the basis that it's in a strong uptrend and there's no sell signals to it just yet. Let's see. We did those. NMDL. Oh, let's see. Yes, this one we recommended a few days ago or last week because of the doji gap up. Doji gap up. They're going to take this right up to the 50. If they do that, they're breaking out of this downtrending channel, and they go through the 50. You got a lot more upside. Let's see. How would you rank the importance of the following metrics to select the best trades? Risk/reward, percent return, if target hit, money employed. Go backwards. Money employed is all, I put all equal dollar amounts in every trade. Percent return, I'm trying to evaluate which ones have the biggest upside potential. Now, the biggest upside potentials are based upon, well, I'm going one step, of where the next resistance level could be. And then the risk-reward is, what is my signal? That's my risk-reward factor. If I see a doji in the oversold condition, they gap it up the next day, I know my risk-reward is that there's a high probability that the trade is going to work, and not only work, but work in a strong fashion. So that's my risk-reward evaluation. Then I go see what my upside potential is. But every trade I put on is the same dollar amount because we're playing with probabilities of what human nature does time after time. But again, the key word there is probabilities. So I have no, I want to say insights into when a good, if I see a good reversal signal, a good buy signal, I know the probabilities are extremely good that it's going to work. But I also know there's probabilities that it might not work, and I don't know what the difference is between the two. So I'm not going to put any more dollar in one trade than a dollar amount in one trade than the next, just based on that premise. And I don't know which ones are going to work, even though I know most of them will work. Skechers, another kind of hammer gap up, and where did it gap up to? I will get away from there, right to this resistance level. If this opens positive, we're going into higher territory. My intraday stops is I'm picking out a spot that tells me we should not be trading at this level at all. Okay, Francisco, I'll try to get to that here in a little bit. But I don't want to be, I don't want to be in a situation. Oh, so. All right, so if I'm buying this one based on the hammer gap up through the resistance level, what is my expectation? My expectation is we should be going this way. Where should we not be going from this chart pattern? We probably shouldn't be coming back down through today's open. So if I was buying on a positive trading, my stop would be right here at the previous day's open, because if it came back down through there, that's telling me they aren't breaking out. They're still lollygagging around here, and I don't want to be in that position. Now, worst case scenario is they come down to the T line and we see them coming back up. You can always put your buy stop at where you got out, because you know it's moving in the right direction at that point. Let's see. So there's things that I have gotten out of that I'll probably suggest getting right back in again, because what is this one doing? A Morningstar signal closing back up above the T line. Tricks that I don't know the answer to. I'm guessing that in this session it might be that case, only for one reason. Number one, you're paying less than 2 Starbucks coffees. Number two, we'd rather have people that are in there that are very serious about learning versus just coming to see a session, because there's going to be kind of a little bit more. I want to say a little bit more detail is the only word I can think of what you should be looking for and why everything is coming together. And so that's going to be for the people that are really serious about trading versus just watching another session. But I'll post-requisite that, and I don't know whether that's the case or not, whether it's for members also. PQ, Morningstar signal right off the 50. I wouldn't be afraid to be buying this one back on positive trading tomorrow. All right, some other ones that were looking good. Whoops, no, the J-hook patterns. This one's a good-looking chart, but the J-hook patterns are looking very strong. And the J-hook patterns basically tell you the selling is over, the buying's coming back in. HGT, you're probably going to see this one recommended tomorrow, because if this moves from here to here, about 3 points, that's telling us we should be heading up into about the $13 area. STX was another one that has a good chart. Little J-hook pattern coming right off the 200-day moving average, which is also a support level over here. Probabilities of this one, if it opens positive, breaking this downward trend channel, has everything going in the right direction, that you definitely want to be a buyer of this one using the T-line as your stop. AFOP. Here's a case where getting out and getting back in here doesn't bother me at all, because right now this is a new trade. This one was closed out. This one's telling us that they are taking this back up in a J-hook pattern. Perfect example of buying at a higher price, knowing it's moving in the right direction. AMPE, there's your classic. There's your flutter kicker signal. Failed at the 200, and we can tell that it failed because you had a shooting star, bearish engulfing signal. But we could also see that they weren't selling it off back below the I don't know the answer, Elliot. Not that I'm stupid. Yes, I am stupid. I just I knew that Pat was trying to keep we were getting a lot of sessions where we were getting tons of people in there, and some of them didn't seem real serious about stuff. So, anyways, for the price of 2 Starbucks coffees, if we ever run into each other, I'll buy you a Starbucks coffee, even though I don't drink coffee. But J-hook pattern right off the T line, back up through the 50. You want to be buying this one. Here's your classic fry pan bottom J-hook pattern. That was AMT BDSI. Yeah, some of these are going to have stochastics in the overbought area, but remember, we're not buying stochastics. We're buying the pattern. We're buying what the what investor sentiment has shown us will occur time after time. Now, there are some patterns that work when you get to the overbought condition. Another J-hook pattern. This is BDSI. Wouldn't be afraid to be buying this one with the anticipation that if you went from 650 to 950, you're heading for 1150 on this one. Tom, that's why you want to take a look sometimes. For example, let's say we were going to buy this on positive trading, but it opened lower. Well, that's not a sign of the bulls. Let me make this bigger so we can see what we're talking about here. This just happened to be one that can kind of use as an example. That if this was a buy signal and we were going to buy it on positive trading, but it opened lower, then you just wait to see if they bring it back up through that level, because if they do, that tells you the bulls are still there. Yeah, I don't have a definite answer because I don't know the answer. W-Wave, another one that you can be buying on positive trading. There's your kicker signal. There's your consolidation. Right smack dab to the T-line. Now get ready for your J-hook pattern. Let's see. Here's a few more that got a good-looking chart. CMGE. There's your flutter kicker type signal. Fry pan bottom. You want to be buying this because if this breaks out through the 50 and the 200, lots of running room to the upside. I'm an end-of-day trader, so buy on positive trading means buy on bullish candle at the end of the day, right? Well, John, I'm usually if you're at an end of the day, I am an end-of-day trader. Ooh, I don't know how you do that. I'm usually doing it the other way. If I see a signal that's ending up strong or doing a signal, I'm buying on the open the next day based upon that signal confirming. Okay, then you're more of a kind of a swing trader then, I take it. Yes, so that's pretty much the method I use is if I can't sit and watch the screen every day, let's say I want to buy ARWR based on this pattern. I don't know where it closed, 1173. I might say, all right, if it comes up to 1180, I want to be a buyer. So it's going to buy me based on the confirmation of the pattern today. And that way, even if you're at work, it's still executing for you. Now, the risk-reward factor is it's probably going to go in the right direction. But if it came back, or sometime during the day, you need to get on and say, all right, I don't want to see it trade at all back below the open, and I don't want to see it close back below the halfway point of this candle. So you can always put that in later in the day or during lunch. DATA. Oh, no, it's right at that time. Yeah, you can place a buy, just like you have a sell stop, you can do a buy stop. So if this stock comes up through XYZ or it comes up through 1040, I want to be a buyer. Oh, shuz butts. There we go. Just Notice all the dojis down here. Then you have a left-right combo. If this opens positive and starts trading positive, what's it telling you? Pretty much telling you this downtrending channel is not being a downtrending channel anymore. Look for your next target up here at the 50-day moving average. I know that David L. has been throwing this one around. This one's still a good-looking chart. Ever since it came off this kind of doji sandwich breakout, there's your double doji, bullish confirmation. You stay long until you see a sell signal on this one. And Gomo, whoops, too many letters because I got fat fingers. Whoops, getting worse yet. There you go. Notice how this one kind of told you what was going on. It was slowing down, and finally it turned it back up. So you've got kind of a double bottom in here. This one you can be buying on positive trading. GDP. Well, GDP. There's a nice J-hook pattern. This is one of the oils. And that one's a good looking one, same as SYRG, another oil. Oh, that's not what I wanted. SYRG. That one's getting ready. There's your bullish engulfing after a hammer. If they open this positive, this little downtrending channel is broken. Could get a good pop out of this one. RNA. RNA has done exactly what you would anticipate, that once they broke through the resistance level, they came right back to the resistance level. Now you have an inverted hammer with bullish confirmation. If this opens positive tomorrow, you want to be buying. All you have to do is use the 50 as a stop. If this opens positive, it's confirming that the inverted hammer right on the 50-day moving average, being confirmed, is putting you into the next wave up, which means if they've supported at this moving average, where's your next target? The next major moving average. So that's kind of how you calculate what your target's going to be. So if you're buying this one at 640 and it goes to 850, 210 on a 640 stock, I can figure this out. About a 30% return. Ticker before Gomo, I think, was Mankind. Still in an uptrend. Let's see. All right, some of the biggies, just to kind of get them out of the way real quick. Tesla. Tesla is starting back up. If this one trades positive tomorrow, it's very simple. You buy it, and you stay long, anticipating the 50-day moving average is going to be your next target, and use the T-line as your stop. Netflix. Netflix has finally broken through the 50. This one can be bought on positive trading tomorrow, and once again, you use the 50 as your stop. You don't want to see it come back down through that level. Apple, got a J-hook pattern. This one you can be buying on positive trading, and if this one's trading positive, you can pretty well rest assured that the market is building up confidence again, because Apple, as well as things like Goldman, Goldman. No, Goldman flat, but as long as they're not selling off, the market's got some upside. Goog. Goog also is trying to bottom in here right up to 200. Notice the Morningstar signal, pop up, stutter step, Morningstar signal, making it likely that the next target is the 50-day moving average. Amazon, flat. Wouldn't be doing anything with Amazon. We were short TRAK, but it was showing too much strength. Oversold, Morningstar signal, and it closed right here on the T-line today, making this as good a probability that it's going to open higher and trade higher as it was going to go down. So with that now running against you, you close out the position. There's better ones to be trading. For example, we're still short FONR because it had a kicker type signal or a doji gap down. You just stay short on this one until you see a buy signal. Okay, let me see what else we've got that would be of interest. I guess that's about it. So with that, are there any questions on candlesticks? Please remind us again when to use. Okay, if I was let me see if I can figure one out. Which one opened lower? I can't remember. If I'm ready to buy and the market's opening lower and the stock is opening lower, I'm not going to jump in because that means there's not any bullishness. But if I think there's going to be bullishness, then I just go to my 10-minute chart and watch when the 10-minute chart looks like it's bottoming out. When it looks like it's starting to bottom out, I'll flip down to the 5-minute chart because the 5-minute chart will give me a little bit faster view of what's going on. And if the 5-minute chart is staying strong or moving strong, that means the 10-minute chart is going to keep coming up. And as long as the 5-minute chart hasn't gotten to the overbought condition with potential for more upside, that means the 10-minute chart has more upside. And if I'm getting ready to buy, then I flip down to the 1-minute chart to make sure the 1-minute chart isn't running out of steam. Do you use pivot points? No, I don't use pivot points. I just use the charts. Just use the signals on the charts. The charts, but you don't use the 10-minute chart to check your buy signal itself, correct? I want to see a buy signal setting up. Let me see if I can figure something out here. Let's try PXLW. Opened lower today. Let's see what the I opened lower today on the 10-minute chart, but we can see immediately the 10-minute chart was starting to show buying. So that's when I'd flip down to my 5-minute chart, and my 5-minute chart says, "Yep, they've already come back up. Now they're trading positive again," which means more than likely my 10-minute chart is going to be coming up. So if I'm getting ready to buy in here, I want to make sure I'm not overbought condition. So I flip down one more, see if I can figure out where this is, to my 1-minute chart. And if my 1-minute chart started to tell me they're coming up, I think that's the right place. If the 1-minute chart still looks good, then I'll start stepping in. A left-right combo is a doji followed by a bullish engulfing signal. And we will do, somebody remind me if we can do I usually do the 1, 5, 10-minute combination, entry combination, using also the 3T and the T line. So I've got all that information somewhere. We'll do that again some night here also. Let's see, where we're on. I want to get back to a daily chart. See if I can. Oh, let's see. I can't remember which one was the left, right. Dave, if I see a left, right combo, I will do it. So we'll probably see one. For a stock to open higher and trade positive at the open, how much time would you watch it before jumping in? If the market is opening higher and the stock is opening higher and it's starting to trade higher, it may only be 10 seconds, 20 seconds, 30 seconds to jump in. If the market is opening lower, not seeming like it's going anywhere, and the stock is opening higher, I might give it a couple minutes to see whether they're still trading positive. And then if the market is opening lower and the stock is opening lower, it might be 45 minutes before you see buyers coming back in. Right now, I'm probably, I've only got one position short on any more in SFON, FONR. Okay, I guess with that, Jim or Rick, do the double line. All right, and then 3.8 seconds, do the next double line. Okay, the Russell 2000, whoops, it's going to look pretty much the same as the Nasdaq. I'd say the Nasdaq. It's back in an uptrend, but it still has to break out through this kind of wedge formation. Wedge formation is not as prevalent on this chart as it is on the Nasdaq chart, where you can see kind of a wedge coming together. So everything will be honky-dory for the bulls if they can break out the Nasdaq and the S&P, or not the S&P, the Russell above this congestion area. Silver just trading absolutely flat, wouldn't be long or short. We did Tesla, ACET. This one I wouldn't be buying just yet. I'd want to make sure it does get up through the T line. But you got to be careful on this type of chart. It's not a true kicker signal, even though it's a strong signal, which means more than likely it's going to come up and then maybe back off. You just have to be alert to the back off. AT. As you can see, it hasn't been very active. It's a slow uptrend. If you own this, you continue to own it as long as it stays in this uptrend. I imagine this probably pays a dividend. And Jive. Jive, you can get ready to buy this one. Now, this is somewhat like a left-right combo. You've got an indecisive day, a hammer, which has a small body, and then a bullish engulfing signal right behind it. So that I'd consider a left-right combo, even though your strongest left-right combo is a doji followed by a bullish engulfing signal. NCT, there's your left-right combo, doji, bullish engulfing, J-hook type pattern. This one you can be buying on positive trading. And HTS, oops, S.HGS. Am I doing that right? There's that slow curve. This one you can be buying. It's broken out through everything. Let's make this a little bit smaller. So when they gap it up through the resistance level, that means everybody and their brother can see they were ready to hit resistance, but they gapped it up and went right through it. That means that resistance isn't going to be resistance anymore. Usually that's where everybody will start jumping in. GMED, this one you can be buying. Again, there's your left-right combo, kind of an indecisive day, bullish engulfing signal. Fry pan bottom, closing right here on the 50. It opens positive. You can be buying that immediately. LKQ. Haven't seen that one for a while, but I wouldn't be long or short this one. There's no chart pattern here that would make me want to be buying this one. And more than likely, it might be stuck in between the 50 and the 200. CPRT. Let's try JKHY. Okay. That one's got a J-hook pattern. That one looks good. Now let's go back to CPRT. There we go. Another one that I probably wouldn't bother to buy until it breaks out through this congestion area, because right now it's telling us it's a sideways chart. But there's kind of your left-right combo again. WBS, Morningstar signal right here on the 200. You can be buying this one. You just have to be able to get through the 50 and through this downtrending channel and then this channel. So you can be a buyer. Just got a lot of junk to get through. For your long-term investors, Whiting, you can be buying this one, especially if it opens positive. And we'll start getting some information out on J.C. Penney. Again, on a longer-term chart, they've finally turned the corner, had some good earnings. They aren't hitting new bottoms. They're now going to higher highs. So this one over the next 6 months could be a $13, $14 stock. PTX. Let's make this bigger. PTX, this one has to open positive and trade positive to stay in it. You do have, it's kind of it's a bullish chart, but nothing that shows any great signal in here. If they open this lower tomorrow, I'd close it out with the anticipation they're going to bring it back to the T-line. Let's see, Steve, that's a bunch of them. Let me do a couple of them. LIOX, get ready to buy this one on positive trading, breaking this downward trend channel. DWRE, oops, DWRE. This one's another one that can be bought, but I'd probably be more apt to buy it after it came up through the 50. AGAIS not found. Walgreens, you stay long right now as long as it stays above the T-line. Rax, you stay long on this one. At this point, I'd probably use the lows of the past 2 days as a stop. If they came back down through this tomorrow, and then you've got a bearish doji sandwich, they're going to take some more profits. This one needs to open positive and trade positive to stay in it. YGE, this one doesn't have a reversal signal, even though it's at the bottoming stage. If you buy it, just be aware of a stutter step, meaning they'll pull it back before they really get it moving. Let's see, I did that wrong, didn't I? NPSP. NPSP. Bullish engulfing. Another one that really doesn't have any great trend. I would rather pay $30 for it, knowing that it broke up through the congestion trend channel. AAL. Another one that has a fry pan bottom setup that you want to stay with as long as you stay above the T-line. Verizon. Just be aware of the lack of magnitude of return, but this one you stay long until you see a sell signal. At this point, seeing this shooting star, even though you're not in the overbought area, I would still have a stop at yesterday's open. If it comes down through there, that means the profit taking has already started. Dick's Sporting Good. That gapped up nicely. If this one opens positive after the best friend type signal, you want to be buying. Tells you the 200 is not going to act as a resistance, and more than likely the 50 will act as resistance. FOLT, another gap up doji best friend. This one you can buy on positive trading tomorrow. And KEX. That's got a little scoop type pattern. Another one you can be buying using the T-line as your stop. Barnes & Noble. Whoops. S.BKS. This one's got that little fry pan bottom. Again, this is one I'd rather pay $16.90 for, knowing that it broke out through this level. But you can be buying this one on positive trading tomorrow. Just kind of a doji sandwich setup. Notice how it consolidated today right back to the 20 and the T line and came back up. Means they're not going to let it come back down below that level again. Oops, S.MM. This one, you don't want to buy unless they start trading it above the T line, then they have to keep it above the T line. If they fail here, that means they're still going to be taking it down. HDY, nothing that I'd get real excited about on this one right now. There's just nothing there. RIBT, another one where you stay long until you see a sell signal. Let's see, GHRM, saw that being touted around today. This one you can buy on positive trading, using the 200 as an obvious support level after a little star formation. If they open this positive, you can see that the 20 is not going to act as a resistance. Woo. Whoops. Woo, that's not the right woo. Western Union. You've got the left-right combo. You can be buying, but it has to get through the T line and the 50 tomorrow to stay in it. I probably wouldn't buy it until it got through those levels. AMRC. This one you can be buying. The Morningstar signal, gap up out of this downtrending channel. Next target is the 50-day moving average. AINV. I do something wrong. AINV. There we go. That one you can buy also. Left-right combo, breaking the downtrending channel. And NI, another kind of little scoop J-hook type pattern. This one you can buy on positive trading using the T-line as your stop. SQNM. All you can do here is stay long as it stays above the T-line. FAS. If you're buying, obviously you've got to get through the T-line, the 50, and the top of the trend channel. But it looks like that's the same thing as the markets themselves, all bouncing off the bottom support level. CRE, this one you want to be buying on positive trading using the T-line tomorrow. That's a good-looking setup. And REGN. This one, as you can see, after the piercing signal, kicker-type signal prior to that, if this opens positive, that means the 50 is not acting as resistance anymore. And TDF, there's your belt hold signal. If that's a proper belt hold signal, look for more upside. Just be aware of the lack of magnitude of move for this one. And SOCB, same scenario, but same scenario as far as the lack of movement of for your return. 3D, nothing there yet to get excited about, just moving sideways. It needs to see something big to tell you the bulls are taking control. An NVDA, inverted hammer, bullish confirmation. If they open this positive, they're breaking this downward trend channel. This one you can be buying on positive trading tomorrow. And FEYE just hasn't had luck in getting out of its own way here recently. However, you're sitting right on the 50, kind of a little fry pan bottom. I'm sorry, the T-line. If it opens positive, you can be buying. You just have to be aware that it needs to break through this level, so it can head for this level. CLF, Stay short until you see a buy signal. And Ford. Ford, as you can see, it's been hovering right here around the 50. This one you can be buying, mostly for the longer term aspect. We were starting to buy this stock a couple years ago at $2. I still think it can get into the 30s. And VRNG. Now, I only think that because the chart pattern is a slow, steady uptrend. Anything beyond that is just a hill of beans. I have no more idea where it's going to go to, but the chart looks good long term. VRNG, you can get ready to buy this, but it definitely has to close above the T line. And ARTX, give it one more day. It needs to stay above the 50, which it more than likely will. Remember, anytime they break through a resistance level, they'll come back and see if it's going to act as support. WOOF, you can be buying this one. Just make sure it gets through the 50. When I say make sure it gets through the 50, if I was buying this tomorrow and I saw it come up here and start waffling, I'd probably close it out. I can always buy it back if it comes back up through the through that level. Exoma, nothing there yet until it does get up above the T line. The 20-year is still in this uptrend. Stay with it as long as it stays above the T line. Quick, same scenario. Came up through the 200, came back to test it. If this opens positive and starts trading positive, you want to be buying immediately. It tells you the 200 is acting as support. NBS, this one also right at that resistance level. If it opens positive, look for it to go to the 50. And Moby, you can get ready. It's setting up. I would rather pay $6.80 for it, knowing that it broke through the 20 and continuing its uptrend. TXD, this one needs evidence. Got a wedge formation. I'd rather be buying this one if it comes up through this level. What call do you like for IT? Oh, I don't know which one it was right off the top of my head. Oh, I think, I think it was I want to say the June 39s were trading at 290. And those seem to make the most sense. Let's see. Whoops. Alcoa, nothing exciting here. Just a slow, steady uptrend. You can stay with it, though, as long as you don't see anything selling it off. Giant, another one where you can stay long as it stays above the T line. And MFA, S.MFA. This one, Steady Eddie, you just stay long as it doesn't close below the T line. And CHTR. Well. Q, stay long, but watch for the probability that now that it hit the 50, it may back off to the T line and then come back up through the second time. Q core, there's your kind of your J hook. Stay long until you see a sell signal. And CHTR, let's see if we can get it this time. There we go. That's a good looking chart. This one you want to be buying on positive trading tomorrow. Okay, all right. Let's see. All right, edgy. All right, let's see. Okay, we're just trying to get enough that people can see uh, um, see what a chart looks like, because the charts aren't going to be all that much different from one chart to the next or through the years. So if you start seeing enough of them, let's see. I hope that is TLT. TLT was backing off. Well. But still in this steady uptrend. So until you see a break of this trend channel, got to figure the interest rates are going to stay down. Bond prices will continue higher. Okay, again, tomorrow we will probably be, you'll see a recommendation on CSLT, and we're already in IPMV, but more than likely we'll recommend HGT as a good J-hook. Last one, BBY. This one, nothing exciting. I would rather pay 63 for it, knowing that it's breaking to the upside. Okay, with that, everybody should be out looking at the stars and watching the flowers grow. So with that, we'll see everybody in the chat rooms.